This question is all about group structures and VATs and having two companies within your group, one for buying and holding and one for buying and selling or trading property, and how the VAT can be claimed back. Now, the problem in the UK is that you're always going to be left holding your dick, paying more tax than you should because of the way the fucking country is set up. But you can try and mitigate parts of it. So, first of all, having a group structure is, even if it's the most basic form, is definitely something you should do as a property investor. And I think the simplest form is to have a holding company at the top, which owns subsidiaries in two smaller companies, one for buying and holding and one for buying and selling or trading assets. Now, the buying and holding, which is what this question is all about. When you buy and hold a property, you will tend to find yourself in a position where you're going to do works to that property. Now, there's two things here. One is that company should not be VAT registered if that's the only thing it's doing, which means you can't claim the VAT back for anything that you spend on. But the plus side is you don't charge VAT on the income, the rent. So there's an additional charge there for the VAT, but you do get that back in terms of a expenditure when you come to sell that property. Now, here's the other negative thing. All of the money that you invest in improving that property, adding value, but not classed as repairs, is not offsettable against the income that you receive from tenants. It's considered some form of CapEx, which means you put the money into the asset, you rent it, it's not tax deductible at that moment in time from the income, but when you sell that property, you get to deduct all of the costs against the profit. So let's keep it really simple. Let's say you buy a property for 100,000, you spend 50 grand improving it, and you rent that for 10 years at £1,000 a month. The only deductible expenses against that property is the mortgage, if you own it in the company, and any other ongoing costs to maintain it. You know, a boiler breaks down, you have to send someone to change a lock, all of those things. But the money that you've put into improving it is not deductible at that moment in time. But in 10 years time, you sell it for a profit. Let's keep it simple at 200,000. You pay tax on the profit, which is the purchase price of 100,000 plus your costs of 50,000, including the money that you put into improve it. So you only pay corporation tax on the 50,000, which, depending on what month you're talking about, which year you're talking about, which fucking government we're going into, could be anything from 19% to 25%. But if Labour have it their way, I'm sure it'll be even higher than that. Coming over to your trading company. Now, this is where you need to be a bit clever. Now, if you're buying a property to sell, everything that you do within that company is VAT claimable. So if I spend the same 50 grand on that property, but I've spent 10 grand of that on VAT, within that first quarter, I'm going to do a VAT return and I'm going to get a VAT refund. It's massively helpful for cash flow. But you have to sell that property. Now, if the intention is to sell, but the market drops like it has done recently, or you've got a delay for planning or whatever, then there's nothing to stop you renting that short term if the intention was always to sell it and you eventually do sell it. But you have to be able to prove that. Now, you can't claim VAT for anything that you spend within this company for your other company. Even though it's a group relief, you need to justify it. You need to show the evidence. So you can't try and offset a cost for your investment company within your trading company just to get the VAT back. And if anything, it's not going to help you in the long term when you do eventually sell those assets. But here's where you need to be clever. You control both companies, which means when you have a general expense like accountancy fees, like legal fees, like car costs, like machinery and plant for your company, which can be used for your group, you whack it through your VAT registered company, because guess what? You get the VAT. And all of the costs are deductible at that moment in time. You'd have to wait to sell the fucking asset 10 years down the line. So it's hopefully helpful, and you can find ways to be savvy with it. But what you can't do is spend money in one company for the other when it should be classed as a capital expenditure, which is offsettable against the profit when you